As the curtains close on 2024, global stock markets present a mixed picture. Some indices ended the year on a positive note while others faltered. France's CAC 40 edged up by 0.1%, reaching 7,307.87. Across the channel, Britain's FTSE 100 remained relatively stable at 8,119.65. Meanwhile, Asian markets presented a more varied picture. Hong Kong's Hang Seng Index saw a modest gain of 0.1%, closing at 20,059.95. However, the Shanghai Composite Index in mainland China experienced a decline, falling by 1.6% to 3,351.76. This divergence highlights the differing economic landscapes across the region. The Australian market also felt the pressure, with the S&P/ASX 200 dropping by 0.9% to end at 8,159.10. With the new year just beginning, investors are closely watching for signs that could indicate the direction of global markets in the coming months. Several factors contribute to this mixed performance, including lingering concerns about global economic growth and geopolitical tensions. Tragedy struck the aviation industry as a Boeing 737-800 crashed in South Korea, resulting in the loss of 179 lives. This devastating incident has sent shockwaves through the industry and cast a shadow over Boeing, the aircraft's manufacturer. In response to the crash, South Korean authorities have grounded all 737-800s operating within the country. This move reflects the seriousness with which the investigation is being conducted and the importance placed on ensuring aviation safety. The impact of the crash on Boeing stock has been significant, with the company's shares plummeting by over 30% throughout the year. This decline reflects investor concerns about the potential financial and reputational damage the company could face as a result of the incident. The investigation into the crash is ongoing, and it is still too early to determine the exact cause. However, the incident serves as a stark reminder of the importance of aviation safety and the potential consequences when things go wrong. China's manufacturing sector, a key driver of global economic growth, showed signs of slowing down in December. The country's Manufacturing Purchasing Managers' Index, or PMI, came in at 50.1, slightly lower than the previous month's reading of 50.3. While a PMI reading above 50 indicates expansion, the slowdown has raised concerns about the effectiveness of recent stimulus measures implemented by the Chinese government. These measures were aimed at bolstering economic activity, but the latest PMI data suggests that more may be needed to sustain growth. The slowdown in China's manufacturing sector has implications for the global economy. As a major consumer of raw materials and a key player in global supply chains, any weakness in China's manufacturing activity can have ripple effects felt around the world. Policymakers and investors alike will be closely monitoring China's economic data in the coming months for signs of a rebound. The performance of China's manufacturing sector will be a key indicator of the country's overall economic health and its potential impact on the global economic outlook. The U.S. economy has been a source of both strength and uncertainty in recent times. On the one hand, the year 2024 saw a period of robust economic expansion, fueled by strong consumer spending and a healthy job market. Inflation, a persistent concern in previous years, had shown signs of cooling, approaching the Federal Reserve's target of 2%. In response to the positive economic indicators, the Federal Reserve implemented 3 interest rate cuts throughout 2024. These cuts were intended to sustain economic growth and prevent inflation from falling too low. However, concerns remain about the potential for inflation to resurface in 2025. The most recent Consumer Price Index data revealed that inflation had ticked up to 2.7% in November, raising questions about whether the Fed's rate cuts were premature. Looking ahead, upcoming economic data releases will be crucial in gauging the trajectory of the U.S. economy. Of particular importance are the construction spending figures for November, scheduled to be released on Thursday, and the manufacturing data for December, due out on Friday. These data releases will provide further insights into the health of 2 key sectors of the U.S. economy. Strong numbers could bolster confidence in the sustainability of the economic expansion, while weak figures could reignite fears of a slowdown or a resurgence of inflation. The U.S. economy stands at a crossroads. and its performance in the coming months will have significant implications for the global economic outlook.